Are we there yet? Is the recession here? Is it coming soon? That seems to be the question that a lot of people are asking about the possibility of a recession. And the banks are all getting super bearish, convincing everybody to sell near bottoms. The tariff wars, all these geopolitical uncertainties are putting people on edge, man. Economists have been predicting it all for the longest of time yet. Every 2 predictions have been predicted 10 times by economists, right? This is the biggest cliffhanger so far, and the tariff fears have really ratcheted up the fear around a recession coming imminently. But stick around as we look at 3 clues that might give us an idea of where we are heading and how much time we could have left. Because make no mistake, recessions always come. The only question is when they come and how bad they are. About a century ago, economist and Maryland Congressman Clarence Long said that the building industry is probably the most strategic single factor in making or breaking booms and depressions. That's why economists have been digging into the housing market to try to spot signs of trouble for the broader economy. By the way, Jerome Powell, lower the damn rates. Anyway, guess what? This study, these analysts have found some pretty juicy stuff. As a 2024 Yale study by Cameron LaPointe showed that big swings in building permits, those green lights for new home construction, can predict financial downturns. LaPointe's team looked at a century of data and found that sharp spikes in permits followed by quick drops often signal economic turmoil, like the Great Depression or the 2008 financial crisis. While we often focus on clues like inverse yield curves or unemployment, which obviously are important pieces of the puzzle, you can't forget how massive the housing and construction market is. It's a beast. It's estimated that the U.S. residential real estate market is poised to dominate with a projected market volume of $110 trillion in 2025, which is over double the size of the S&P 500. Think about that. Buying a house, of course, is probably the biggest purchase that the average person is ever going to make in their lives, and houses don't just build themselves. Guess what? They need a whole bunch of stuff to make that happen. Wood and nails and cables and all the rest of it. An army of workers also has to come in to do that for you. This means a lot of spending, a lot of employment across a whole variety of things. All those things need to be made and brought and put together. This market's so big, it contributes around 16% to the United States GDP, according to the National Association of Home Builders, when all factors are included. Now, all this construction has a starting line, and it all begins with permits. This makes building permits an excellent leading indicator because they are an early step in the construction process. Eric Basmajian, an economic cycle analyst and the founder of EPB Research, said that since 1962, a 10% drop in permits from their 24-month peak has happened 340 times, with a 44% chance of a recession within 18 months. Add in a yield curve inversion, the odds jump to 75%. If permits keep falling, the chance hits 83%, with a 10.5-month heads up. Right now, in April 2025, permits have stabilized after a dip. No red alert yet. But if they tank again, then hope that your exit plan is ready and your plan B is ready to go. Let's move on to the flavor of the season. Tariffs. This is the next big wild card for economic recession predictions and hyperventilations at the moment. Before we get into that, thanks to Crypto.com for sponsoring this video. If you're looking for a trusted platform to trade crypto, you should check out Crypto.com. The Crypto.com exchange is the most licensed exchange in the market, serving 140 million users across 90 different countries. Whether you're into spot trading, you want to get out there, use some advanced bots, you want to use a grid bot, you want to use a TWAP bot, you want to use a DCA bot, I don't care what bot you use Botman. It has everything you need to trade efficiently with robust API connectivity and a VIP program offering lower fees. This is built for serious traders, so don't miss out. Sign up today, link down below in the description, and you can take your trading to the next level with the Crypto.com exchange. Tariffs, the best tariff, the biggest tariffs. Some people say the best tariffs. Word on the street, Donald Trump is dialing down his tariff position. We'll give China some breathing room, though expecting 0 tariffs is a big ask and probably not going to happen. Given Trump's unpredictable 4D chess moves, there is no assurance that the softening tariff stance will last long. We're one tweet away from economic Armageddon all the time, it seems. With this in mind, let's look at a report from Apollo Academy, a financial educational platform geared towards financial professionals, which is dropping, well, some pretty doomy stuff here, okay? It's all pretty damn grim, if we're gonna be honest about it. Not into those vibes personally, man. Life's a vibe, life's electric, it's beautiful. Screw this doomer bullshit. But anyway, here's what they had to say. Their chief economist, Torsten Slock, saying that there is now a 90% chance of what can be called a voluntary trade reset recession, or a VTRR. VTRR is just fancy talk for a potential U.S. recession triggered by deliberate trade policy changes, specifically high tariffs imposed under the Trump administration. According to the Apollo Academy, high tariffs, unsurprisingly, are going to hurt a lot of businesses. We're already hearing those stories coming out about basically businesses that shut down or stopped all business overnight because shipments stopped coming, or the tariffs just made it impossible for them to return a profit. A lot of businesses run on pretty small margins, and if you have a 200% tariff, you're not going to get any kind of profit, okay? Tariffs obviously have to be paid by companies when the imported good arrives to the USA, and they may not have the working capital to cover those sudden expenses, or a variety of different factors. It may not make sense for them anymore. They had a 15% profit margin, well, it's all gone now. Here's the bigger problem. According to the Apollo Academy report, small businesses account for more than 80%. Crazy number, actually. Think about all the big corporations, Walmart and Apple and Amazon, all that shit. 80% of U.S. employment and capital expenditure comes from small businesses, which are most likely to get crushed by an intense tariffs regime. Well, data from the Bureau of Labor Statistics says small businesses contributed 65% of the total net job creation from 2013 to 2023, and they have an average employed nearly half of the workforce. That's crazy. They have on average employed nearly half the workforce. Think how crazy it is. So whether it's 80% or 50%, it's massive. It's a huge chunk of the workforce. And if people aren't going to restaurants or putt-putt golf or whatever other small businesses people are running, that's a problem. And these small businesses will have to cut staff, unemployment surges, and then we get economic Armageddon. Just imagine what happens if a big percentage of this sector folds. A lot of small businesses go out of business and they have to declare bankruptcy. People are going to be without jobs. That means no wages. No wages means no money for goods and services. That means less corporate earnings. That means less profit for companies, less profits for small businesses who have to fire more employees. It's an economic death spiral, economic contraction in a very serious way. A one-way ticket to Goblin Town. Better bring your beer because the goblin's gonna drink it all. Now let's see what the crowd thinks here, by the way. Polymarket has predicted the winner of the last US presidential election, so maybe it can tell us what is up with the economy. Nothing like pure speculation gambling markets to tell us what's going on. At the time of recording, Polymarket bettors are predicting a 52% chance of a recession in 2025. Interesting. That's at the time we recorded this. Might be a bit different by the time the editor gets around to screenshotting this, but yeah, that's approximately where we are right now. It's a coin toss at this stage. Now, this did spike to 66% in early April because of Liberation Day. Woo! Liberating our portfolios from gains. The escalating trade war, the market did not like that. But this did drop to nearly 50%, so going back down, less chance of recession after Trump showed some signs of flexibility and that there's talks of deals being done, and that's not going to be as crazy, and blah, 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 things being walked back, they're not going to fire Jerome Powell, all that sort of stuff. That's all good. But beware that it only takes one negative tweet to push us off a cliff again. 10,000% tariffs against China. Brr. So what do all these clues tell us? Well, recession's always in the cards. It's just part of the business cycle's roller coaster of booms and busts. Right now, the business cycle, by the way, is at the bottom. Most macro indicators are bottomed out. It's the worst since 2008. Yeah, the bottom of 2008 when we were at the bottom, so probably have a lot of upside to go. Recessions always come, guys. The real question, how long a recession is going to last after the expansion? How long will our expansion last? Is our expansion almost over, or is there a big expansion period coming after which there will be a horrific contraction? But, Lark, lots of economists are predicting recession soon. I've been hearing that for years, and you can't trust the banks. Oh, JP Morgan and Goldman Sachs are predicting a recession ASAP, right at the bottom of the market. Sell your stocks quick. They're fucking liars. Economist Paul Samuelson said it the best. The market has called 9 of the last 5 recessions. Now, don't get me wrong. We'll hit bear market territory eventually. It'll be absolutely horrific beyond your wildest imagining. Nothing goes up forever. Don't overthink it. Recessions come. Bear markets come. You need to take profits. Okay, you need to continue to protect your downside, protect your capital, ensure your family's financial independence as hard as you can. Play these markets hard, lock in, get your money out. Once we're already in a recession, of course, most people won't even realize it until it's actually happened. Then the question comes is, how long is it going to last? And how bad's it going to be? Is it going to be the new Great Depression? Every time markets go down 2%, it's the new Great Depression coming. But make sure you do have enough dry powder to scoop up discounted assets when the shit really hits the fan, because that's when great wealth is made. Buying when everybody else says that the sky is falling. Make sure you have enough liquidity to tide you over and enough to invest during that time. You better have a plan for getting money out so you can put money back in later and being ready to sit on things in the interim period. So those are the questions to ask. Not fighting over when it hits, because it will hit at some point. And you need to keep discipline and keep taking money out, stacking cash, getting ready for, well, whenever the next shit show hits, because they always come. That's it. Thanks for watching.